Shares of Ford Motor losing a little bit of ground in Thursday's session after the automaker posted mixed second quarter results. Here's a quick look at the numbers. Profits came in at 52 cents a share, excluding some one-time items. Now that was 8 cents a share below forecasts, but on the top line, sales came in at $39.5 billion. That was up 6% from the same period a year ago and roughly $3 billion above estimates. Well, joining us from Ford's headquarters is the company's CFO, Bob Shanks. Bob, great to see you again.
It's good to see you too, Ruben.
Now that report, not all doom and gloom, but it did sound some cautious notes. You were up against some tough comps. Last year in the second quarter, you had that F-150 launch, so not all bad.
No, not at all. We think that the quarter was a strong quarter, and when you combine that with the first quarter, which was the best we've ever had, we delivered a record first half for the company and for North America in terms of profitability and margins. And then let's not forget, too, we had great results in Europe, and we had the best quarterly operating cash flow that we've ever delivered. So there were a lot of good things in there, but you're right, we did highlight some risks that we see not only in the first quarter and the second quarter that we actually offset, but in the second half as well, and we talked at length about that today on the call.
Talk a little bit about what you're seeing in terms of the U.S. economy. Do you expect Americans to keep buying cars at the pace we've seen over the past year, or do you expect to see a bit of a slowdown?
Well, that's actually one of the issues that we highlighted. We saw in the first half of the year a very healthy level of industry sales, but frankly, it was a little bit softer than what we had expected at the beginning of the year, primarily on the retail side. As we look at the second half of the year, we see that that softness is going to continue. We think that compared with a year ago, it'll be lighter. And when you compare the second half versus the first half of this year, it's going to be softer. We think that will continue into 2017. So we think consumers will continue to buy at levels that are quite high in an absolute sense. But the growth that we've seen since 2009, at least for now, we think that's ended.
Now, the Ford Credit Union taking a bit of a hit on an increase in auto loan defaults. Here we are 1 month into the third quarter. Are you seeing that issue continue?
Well, the bigger impact on Ford Credit was actually lease residuals. What we've seen is there's more vehicles coming back from lease, not only for Ford, but across the broader industry. And you might have heard people talking about a car recession as more and more consumers actually are more interested in SUVs and trucks. So what we've seen is lower values going through the auctions for smaller vehicles, and so we have reflected that effect in terms of our portfolio that we have of vehicles still in lease. We've had to reset the depreciation to the lease-in values for those vehicles, and that was the biggest impact. In terms of credit losses, there was an impact there. Some of that is just the business is bigger, so we have to increase the reserves. But some of it also was around the fact that we have seen higher delinquencies, really just coming back to normal levels. But within that, we're seeing more people, once they've gone delinquent, actually default. Not any concern around that in particular, because that also is returning back to what might be considered more normal levels, but certainly is different than we saw for the last several years coming out of the Great Recession.
Now, you talked a little bit about those risks that we're seeing here in the U.S., but when you look at the global macro picture, what are some of the biggest risks for the business in the second half of the year?
Well, the first thing I'd say is we see Europe as a big opportunity. We made over $900 million in the first half of the year and really good margins there, 6% through the first half. So Europe is an opportunity, although clearly we now have to deal with Brexit. In terms of risks, it's probably two. One of them is around the level of negative pricing in China. We certainly have seen a bit more negative pricing than what we had expected. There's also, in the Middle East and Africa region, we've just seen a lot of issues, whether it's currencies, low oil prices, political strife, labor disruption, that's affecting many of the markets across that continent. And then, of course, in South America, they're still in deep recession in Brazil, although fortunately, there might be a little bit of light on the horizon in terms of a bottoming out and potentially a turnaround next year, but we're still waiting to see more signs that that is in fact what's going to happen.
You mentioned China. What are the pricing issues there? How are those working their way into the business? And do you see any sort of, any of those issues kind of resolving themselves in the second half of the year?
Well, what we have seen for many years actually are declining prices across the entire industry in China as it becomes a more normal, mature market. What we had expected this year is for the price declines to be 5 to 6%. What we saw through the first half is nearly 7%, and we were a bit higher than that, low 7s. We do think that will moderate in the second half of the year. Some of that is because there was a sharp decline in the second half last year, so we think the comps are going to be a little bit better. But on a sequential basis, we've already seen evidence that the pace of the decline is moderating and probably will come in about 6% or a little bit higher. But nonetheless, that's a little bit higher than what we had expected. I think going forward, that will continue until the overall market, I would say, is much more mature. It already is on the East Coast and where the major big cities are around the coastal areas. Still further progress is still ahead of us in terms of maturation in the interior.
Bob, thank you so much for your time today. We really appreciate it.
Thanks, Ruben. Appreciate it. Take care now.
That was Bob Shanks, CFO of Ford Motor, joining us from Dearborn. For The Street, I'm Ruben Ramirez in New York.